All right, how's everybody doing? It is Thursday afternoon, making this video. And I'm bothered. I am bothered by what the Fed did yesterday. It's really crazy that a central bank, which is a policy setter, is following what the market dictates. That is not something that a monopolist, which is what the central bank is, should be doing. A monopolist, a policy setter, should be leading the markets, not following them. Now, this so-called movement to neutral or to the bullish side, I'm seeing all this commentary about that, how the Fed caved in with the bulls. First of all, let's understand something. Halting rate increases and halting the balance sheet unwinding, if indeed they're going to do that, we still have to see, and those numbers can be checked, and I check those numbers weekly. But it sounds like they are at least moving away from that as a policy tool. And again, Powell's comments yesterday were very opaque. They were confusing, hard to understand. It almost made me think back to the days of Alan Greenspan, when it was on purpose that he would obfuscate what he was trying to say. I mean, he was known for that. So I really cannot tell, but the good news is we can look at the numbers and see exactly what is going on. But the cessation of rate hikes, that's not bullish. I'm sorry to tell you, that is not bullish. We need those rate hikes as a mechanism to funnel income to the economy. And we need the reduction of the Fed's balance sheet. In other words, bringing reserve balances down by restoring those high quality, very important collateral back to the economy. When the Fed allows those treasuries and mortgage-backed securities to roll off, in effect, what that does is fill the economy back up with those instruments which the Fed had previously taken for itself and withdrawn all that income. So these things are not bullish. They are not bullish. And my macro outlook, in large part since December 2015, and then additionally in October 2017, was based on this monetary policy stance of the Fed. Number one, a two-pronged thing, which was the rate hikes, okay? That was fiscal expansion, and balance sheet reduction, which was, in a sense, fiscal expansion, you could call it that, or resupplying the economy with high-quality, higher-yielding assets. In other words, addition of income. The whole thing equates to addition of income. Now, the halting of this is bad. It is not bullish. I'm telling you right now, it is not bullish. And it is not bearish for the dollar. It is not bullish for gold. And it is not necessarily bullish for stocks. Now, the economy is showing signs of slowing down, not tremendously. But today, as a matter of fact, if you looked at weekly claims for unemployment insurance, jumped up to the highest level in 16 months. We're going to get the jobs report tomorrow. By the way, I sent out to my subscribers my forecast for tomorrow's payroll number. And as you know, I am very, very accurate on that in the most important sense. And that is the deviation from the consensus forecast. That's what moves the markets. And I tell you what the move is going to be, just like I told everyone yesterday that if the Fed does what it decided to do, I said stocks are going to rally, bonds are going to rally, the dollar is going to sell off, gold is going to rally. Now, all of that might reverse. I don't know if that is going to be a sustainable reaction, simply because, again, I'll repeat, what the Fed did was not bullish for the economy. It was not bullish for the economy. Now, I don't know about the $50 billion a month runoff, and again, we'll be able to see those numbers, or I'll be able to see those numbers. and I'll have a better idea, because there was no way, I don't think, that anyone could take away anything concrete from what Powell was saying. He was just like all over the map, and at the same time not saying anything. So I'll see those numbers. But right now, I have to be honest that this may completely change my outlook. Now, I know fiscal expansion is still happening in a very large amount, but even that's slowing down. The growth rate of spending is slowing down, and that is a result of the government shutdown, which now is temporarily over, but nobody got paid. Still nobody got paid. And he's threatening to shut it down again in another couple of weeks. And we have the whole debt ceiling issue coming up in March, which the government could be held hostage on that once again. So I don't like what the Fed did. It is not bullish. It may cause me to completely reverse my positions. Right now I'm hanging on for the moment. But again, if you have an understanding of economics and the monetary system, which 99.999% of people out there don't, you see all the headlines today how the Fed took the bullish move and they caved in for the bulls. Nah, it's not bullish. Just like rate hikes were not bearish. So there's a problem here. We have a Fed, and why should I be surprised by this? I shouldn't, because this is the institutional mentality. They look at the market. I'll tell you another thing, that the Fed fund futures, the probability for a rate hike this year, and it was starting to creep back for that June meeting, that absolutely collapsed. And the Fed follows the market. It is not a leader of the market, which it should be. It follows the market. The Fed needs to raise interest rates. It needs to unwind, especially needs to unwind the balance sheet. I mean, again, I'll go back to the fact that when the Fed surveyed banks, asking them how much, what is the ideal level of reserves in the system that you think you would be comfortable with to operate, and the bank said 600 billion. They came back. I have the paper, I have the survey, 600 billion. Well, it's 1.6 trillion. They're $1 trillion over what the banks say they need. It's not necessary to just ram all these reserves onto bank balance sheets. They don't need it. This is not Jimmy Stewart, It's a Wonderful Life movie where Bailey's building a loan, the banks are lending out their reserves. No. Loans create reserves. The action of government spending creates reserves. If government spending went on unimpeded without the Fed management of reserves, you'd have infinite reserves in the banking system and the overnight rate would be zero at all times. It takes effort to keep a positive rate, but that's getting into a whole other discussion, which I've done here in the past. So I'll repeat, what the Fed did yesterday was not bullish. It may cause me to completely change my outlook and my position. I have to see what the numbers are in the weekly Fed report that comes out every Thursday to see actually if they are continuing to let those securities roll off and reduce the level of reserves in the system. I cannot tell from what Powell said yesterday. I don't think anybody can tell from what Powell said yesterday. His comments were opaque. He said nothing. So yeah, that's where we are. It's not bullish. It's a disappointment to see that happen, but I should not be surprised by it because this is the institutional mentality. This is junk economics in practice. These are these guys who literally pretty much don't know what they're doing, but they look at the market for guidance, and the market's looking at them for guidance, so it's like, who's looking at who? There's no leadership. It's a clown show. So we'll see what happens. I'll see everybody later. Oh, by the way, if you want to get my number on the payroll forecast, go to my website now, pitbulleconomics.com, and sign up for a 30-day free trial of either MMT Trader or Zombie Trading, and I will send it to you.